I'm Jane King at the NASDAQ market site. Hip to be square, not for this IPO.
I'm Remy Blair in San Francisco. A local Bay Area biopharma is the biggest gainer on the NASDAQ, but is it good news for Kalobios? And Match Group has gone public. Will the latest IPO be a match made in heaven for investors?
Well, welcome to Small Cap Nation. I'm Jane King at the NASDAQ market site in Times Square. Square is going public at a price lower than it wanted. It priced last night at $9 a share. That was below the $11 to $13 desired. However, the first trade did take place today above $11 a share. Now, that values the mobile payment processing company right around $3 billion. The weak IPO pricing, though, raises the pressure on Jack Dorsey. He's Square's chief executive. Last month, Dorsey was appointed CEO of Twitter, the social media company he also co-founded. Some critics questioning whether he will be able to manage two public companies at the same time. Well, ON Semiconductor said that it plans to buy Fairchild Semiconductor for about $2.3 billion in cash. This will expand its products in the automotive, industrial, and smartphone industries. ON Semiconductor is offering $20 for each share of Fairchild. The combined company will have about $5 billion of revenue a year. The deal is expected to close in the second quarter of 2016. Well, Keurig Green Mountain reported fiscal fourth quarter results that beat expectations, as well as an increase in its dividend. The company's stock has fallen more than 60% this year amid a plunge in sales. Now, the company does plan to roll out the Keurig Cold, a single-serve brewer for beverages, including sodas and iced tea, amid sliding soda sales in the U.S. The success of the product is crucial following weak sales of the Keurig 2.0 model after customers discovered it only worked with certain K-cups. Well, lots of small-cap companies are making news today, so here's a rundown. AgroFresh has authorized a $10 million buyback of its stock. Anavex is proceeding with development for its Alzheimer's drug. CaredX has revised its pricing determination for AlloMap. Jamming Java says it will vigorously contest the SEC's allegations that it's a pump and dump scheme. Starbucks Carriers reported a larger loss than what was expected. Universal Insurance Holdings calls Lakewood's statements misleading. Lakewood had identified Universal as a good candidate to be short. AMAG Pharma says the FDA has requested more information on its single-dose Makena. Charles River Labs buys Germany's Oncotest. Sina beats expectations. Simtech's earnings lagged estimates. Reuters reports that Blackstone is not interested in investing in SunEdison's debt. Toomey will replace IPC Healthcare in the S&P Small Cap 600 index. And Vitae reports positive top-line results from its autoimmune disease treatment. Well, Square and Match are not the only IPOs getting attention today. Here are some others that have priced or are expected to price. Mimecast priced 7.75 million shares at $10. That was the low end of the range. Noble Midstream Partners priced 12.5 million shares at $19 to $21. Truck Hero prices 11 million shares at $17 to $19. Duluth Holdings prices 6.7 million shares at $14 to $16. And Oprah's Famous Magic is paying off for Weight Watchers. Shares of the weight loss product company have nearly doubled in the last month as Oprah invested in the company and took a seat on its board of directors. The company's most important time of the year, January, is coming up as well. Biopharma name on the brink of shutting down is rallying today. What's behind the sudden surge in Kalobios?
Hi Jane, Kalabios is rallying on Thursday morning. It's not IPOs taking the spotlight amongst the pharma names. The triple-digit percentage gain may come as a surprise. The rally took shares above the $13 mark at the open. Now, last Friday, Kalabios announced that it was winding down its operations and liquidating assets. It also said it would discontinue development of two blood cancer drugs. Then Turing Pharmaceuticals' controversial CEO Martin Shkreli stepped in and bought 1.2 million shares of the company. Now, according to a regulatory filing with the SEC, shares were bought at prices ranging between 61 cents and $2.43 each on Monday and Tuesday of this week. Now, Shkreli owns 1.6 million shares, making him Kalabios' largest shareholder with a 39% stake. Meanwhile, Kalabios says it has been informed that an investor group comprised of Martin Shkreli and associates altogether have acquired more than 50% of the outstanding shares of Kalabios. And shares of the South San Francisco-based biopharma settled down in the previous session with the stock holding right above the $2 mark. In pre-market trade, it was up by over 700%. Now prices have come down since the open, but it's still clinging to the 12-buck handle, and it is still trading off 52-week highs of $60 a share.
Turing CEO caused an uproar at the end of the summer. The drug pricing debates were set off, and the sell-off in pharma caused panic among investors.
That's right, Shkreli became the symbol of price gouging in September. Privately held Turing Pharmaceuticals raised the price of Daraprim from $13.50 to $750 a tablet. And facing backlash, he later said he would lower the price, but has yet to do so. The former hedge fund manager indicated the price reduction would be modest. Last month, he announced his exit from a losing bet made on Valeant Pharmaceuticals after the big pharma name was accused of accounting irregularities. Separately, Democratic presidential candidate Hillary Clinton called out drug pricing practices earlier this fall. In Washington, D.C., the Health and Human Services Department is considering measures to protect consumers, while lawmakers are launching a task force to probe the issue.
And for Kalobios, does the future look bright or grim for the company?
The future of the company is the key question here. It is possible that Shkreli wants to merge the two companies to take Turing Pharmaceuticals public. At the same time, he could sell his stake in Kalabios and make a huge profit. He has yet to make any announcements about his intentions. As for Kalobios, the company is in discussions with Shkreli regarding possible direction for the company to stay in operation. Ronald Martel, the company's executive chairman, says they have received communications from Mr. Shkreli informing us of his group's ownership position and a proposal to continue the company's operations. Our board of directors is prepared to entertain any constructive proposal, which we will act upon promptly. Addressing short-term cash needs is our first priority, and we continue to be open to further dialogue. So we will have to keep close tabs on any announcements from the company, as well as its shareholders, for a better idea of the company's direction.
Straight ahead, we take a look at hedge funds, the top 10 trends investors should know when Small Cap Nation comes right back.
Guys, I got the jerseys. El Nino.
Aquí.
Spray Dan.
Oh, yeah.
Don Ovan.
Think that's me?
You guy. It's $40. Can you cover that?
I'll send it to you right now. Done.
Okay, got it. So hat-trick Rick, he's the best player on our team. You get the ball, you give it to him.
Great. Rick.
On your phone, online, on the go, Wells Fargo makes it easy to get banking done.
All right, Don, you're on. Nope, just kidding.
Doug, you've been staring at that for a while, huh? Listen, TD Ameritrade has former floor traders to help walk you through that complex trade, so you'll be confident enough to do what you want. I'll pull up your number. Blammo. Let's get those guys on the horn. Ooh. Looks like it is time to upgrade your phone, Douglas.
For all the confidence you need, TD Ameritrade. You got this.
Let's go, Serena. Fight, fight. Come on, fight. Stay low. Come on, Serena.
That's the top. Here we go. 2, 4, 5, 6. Whoa, stop. Let's go back. 1, 2. Whoa, we're gonna stop there. I bet we can do it even better.
It took tennis legend Serena Williams, fencing champion Tim Morehouse, and the world-famous Rockettes years to master their craft. But it took them only moments to master paying bills at Chase.com, depositing checks at Chase ATMs, and transferring funds on the mobile app. Technology designed for you, so you can easily master the way you bank.
Investing in hedge funds is not the business it used to be. How do you make sure you know what you're getting into? I spoke with managing partner of Agecroft Partners, Don Steinbruch, about the top 10 trends right now in the hedge fund industry. Don Steinbruch, nice to see you again from Agecroft Partners and our ongoing discussion about the world of hedge funds and learning about them, how they work and how to invest in them. So let's start with this. I mean, you've asked, we've talked about significant increases in demand for hedge fund strategies with low correlations to the capital markets. So explain all that to me, please.
Yeah, this is a big change. You know, over the past 6 years in the hedge fund industry, it's been all about beta or market exposure. For equity-oriented hedge fund strategies like activists, long-short equity, the more exposure you had to the market, the better you did. The more hedged you were, the worse you did. And that's because the equity market went straight up. Same thing on the fixed income side. The more risk you took, whether it was in structured credit, distressed debt, high yield fixed income, the better you did, because the fixed income market also went straight up. Interest rates went down, they're now at near historical lows. Credit spreads tightened, which also causes the price of bonds to go up. So past 6 years, all about beta. Going forward, it's all about uncorrelated strategies, and that's because, you know, a lot of people are worried. You know, with rates where they are, with equity market valuations above historical averages, and with the Fed about to raise interest rates, it's not good for capital markets. There's a lot of people that say it's different this time, that we're in a low inflation environment for a very long time, low interest rates, but every time historically I've heard someone say it's different this time, it's not.
It's not, yeah. Well, and low inflation can turn into high inflation very quickly, as
That
we've
is
seen
correct.
in history, so you can't rely on that too long. So what does correlation mean exactly, and why is it important to focus on it during sell-offs?
Well, correlation is basically a measure of how two things move relative to one another. It ranges from -1, meaning things move in opposite directions, to +1. And just think about it. You don't want a portfolio where everything moves up and down at the same time. It creates a lot more volatility. You want things that are not correlated, that kind of randomly move. What pension funds learned in 2008 is the correlations between various investments goes up in a market sell-off. So they lost a lot more money than they thought they were going to lose in a diversified portfolio. What people are looking for is strategies that are not correlated to the equity or fixed income market or move independently.
And where might they find something like that? Commodities?
Well,
where do you go?
You know, there's a lot of different strategies. I want to spend a little bit of time talking about market neutral equity, but they could go into CTAs, relative value fixed income, reinsurance, merger arbitrage, direct lending, just to name a few.
Okay, so you mentioned neutrality, so let's touch on that subject too.
Sure. Market neutral equity is a hedge fund strategy that you could either buy in a hedge fund structure or a 40 Act or mutual fund structure. And basically, it's a strategy that is going long an equal amount of stocks that is going short. So it's not trying to get return from timing the market. It's trying to get return through security selection, where the longs are expected to hopefully outperform the S&P, and the shorts are expected to go down less than the S&P 500.
Now, what's the difference between net and gross exposure?
All right, so net exposure is your longs minus your shorts.
Okay.
So if you're 100% long and 90% short the market, 100 minus 90 is 10. Your net exposure would be 10, and you'd expect the portfolio to go up 10% of whatever the market goes up, go down 10% what the market goes down, and then the additional return would be through security selection. Gross exposure, and that's something you really want to focus on, it's how much leverage you have in the portfolio. So that's where you add longs and shorts together. So 100 plus 90, your gross would be 190. If you're investing in a market neutral fund, you probably want to stay below 250 gross. You know, there's some that get as high as 400 gross, and once you get up that high, you tend to add a little bit more risk to the portfolio.
Okay, and then also shorting a stock. How does that work? What does that mean? I know you're negative. How does it work?
Sure. So when you short a stock, you're hoping the stock goes down. And basically the mechanics are you borrow a security you don't have. You borrowed from your brokerage firm, you borrowed from the custodial bank. Let's say the stock you borrow is currently selling at $50 a share. You borrow it, at some point you got to give it back. But you're allowed to pay money to borrow it and sell it in the marketplace. And you sell it for $50 a share, and your hope is the company is not good, the price is going to go down, you're going to buy it back at $20 a share, and you'll make a $30 profit. You sell it for $50, you buy it for $20, you keep $30, then you give the stock back to who you borrowed it from. If the stock goes up, you have to buy it back for more than you paid for it. So there is risk with shorting stocks. The risk is a lot less when you combine it with longs, because shorts move in the opposite direction, and if the market goes up 10%, your average short's going to go down around 10%, but it's going to be offset by your longs going up 10%. So by having equal long, equal short, you are market neutral to market. The movements of the market aren't going to affect your portfolio that much.
Okay, and let's talk about different types of market neutral managers. So the first one would be fundamental versus quantitative.
Yeah, there's a lot of different type of market neutral managers in the market today. Fundamental managers are managers that do fundamental research. They're going and visiting companies. They're looking at the competitiveness of products versus competitors. They're looking at the valuations of the company, and they're coming up with their own earnings forecasts. And if it's above what street estimates are, they're going to go long. If it's below street estimates, they're going to sell short. Quantitative managers don't do any fundamental analysis at all. All they do is they have models that take into consideration various factors. They might be financial factors, they might be momentum factors, direction of the market, they might be chartist, where they graph out how the movement of stocks are, and the models tell them what to go long, what to go short. There are other type of market neutral strategies like sector managers. Market neutral works very well in a particular sector. For example, technology. You have winners and losers. So if someone focuses just on technology, they should be experts in that area, and they should be able to go long if they're talented, Apple, and short BlackBerry. And for every component of the technology industry, there are winners and losers, and you make money by going long the winners and short the losers. There's also people that focus on the consumer sector. There are people that focus on financials. So sector-focused market neutral managers are one type. There are others that are multi-sector that focus just on the US. There are others that are global in nature. Some focus on large cap, some focus on small cap. I personally like people that focus in a small cap area or in a particular sector because I think there are greater inefficiencies with those particular managers.
It seems like that would be very hard to keep up with. This world is so complex to keep up with that. That must almost be a 24-hour-a-day job to keep up with all the fundamental analysis out there.
Well, the one thing I would say is before investing in one of these managers, it's important not to just look at performance. You really got to look at multiple factors. Look at the organization, look at the people's bios, what schools they went to, where they worked before, what their process is. Make sure you understand it. If you don't understand it, don't invest. Risk control, such as leverage. Obviously, performance is one thing you look at. Service providers. If you don't feel completely comfortable with them, I would avoid them, but market neutral is one strategy that is not correlated to the markets, and if you're afraid of a market selling off, it's something that you might want to consider.
So that would be a good place to be, to hedge, maybe a long pension fund or something like that, to be in that area.
Yeah, absolutely. Or if someone has a retirement plan and they have too much long equity, it might make sense to put some of that in market neutral, so if there's a sell-off in the marketplace, their net value doesn't go down as much.
Okay, thank you, Don, very much. Very informative.
It was my pleasure.
Okay.
Cheers.
Thanks.
The European markets have followed the Far Eastern markets up, and 2 new listings on the Paris Euronext today. We'll take you across the pond when Small Cap Nation returns.
Good. Very good. You see something moving off the shelves, and your first thought is to investigate the company. You are Type E. Yes, investment opportunities can be anywhere. Or not. But you know the difference.
E-Trade's barcode scanner. Shorten the distance between intuition and action. E-Trade. Opportunity is...
Before they sat down, one more time, just for themselves. Before the last grandchild graced the stage. Before Katie and her husband hit that rough patch. Before Kevin finally came home and the first grandchild arrived. Before the sons-in-law, daughters-in-law, and Brad's brief brush with the law. Before the second British invasion. Before Katie, Debbie, Kevin, and Brad. Before they became a family. There was a connection that started it all and made the future the wonderful thing it turned out to be. We know we're not the center of your life, but we'll do our best to help you connect to what is.
Sometimes the present looked bright, sometimes romantic. There were tears in my eyes, and tears in my eyes. And so many little things that we learned were really the biggest things. Through it all, we saved and had a retirement plan, and someone who listened and helped us along the way. Because we always knew that someday the future would be the present.
Every someday needs a plan. Talk with us about your retirement today.
Graham, how have the European markets been behaving today?
Well, the European markets, with the exception of Italy and Spain, ended up yesterday closing up after a very choppy day. Today we had a positive start with really all the markets following the Far East and rising, and they've held in the green so far today. In the data front, UK retail sales increased by 3.8% in October over the same month in the previous year. Now the previous for September had been 6.2. So it looks like retail sales are slowing. Is this pre-economy Christmas saving, people deferring purchases, or is this a real sign that the economy is slowing? We'll have to probably wait till next month to get a firmer view on that. Next ECB meeting, the analysts say that the cut in the deposit rate is already priced in, and some 70% of the market has priced in a Fed rate rise in December. But it's 2 weeks to the next ECB main meeting, 3 weeks to the Bank of England, and nearly 4 weeks to the next Fed meeting. So we can expect volatility in the markets as players hedge their bets or lose their confidence. We'll have to wait and see.
Well, Graham, what are you looking at today?
Well, Jane, we have no actual IPOs today, but we have two different listings on the Euronext. The first is as a result of the deal between the Finnish company Nokia, best known of course for its portable telephones, and the French technology company Alcatel, which has a wide range of products. Euronext has approved and announced the admission to listing and trading on the regulated market of Euronext of close to 4 million existing ordinary shares of the Nokia Corporation today through a direct listing procedure. Nokia had agreed to combine with Alcatel-Lucent in an all-share public exchange offer in France, United States, betting its 15.6 billion acquisition will allow it to better compete in the global race for scale in the business of making telecoms and internet gear. Nokia is attempting to create a one-stop shop for telecom companies and internet service providers as it comes under heightened conditions and competition from the new player in the form of China's Huawei and old-time rivals in the form of Nordic rival Ericsson AB of Sweden. Like Ericsson, Nokia has been under pressure to deliver its revenue stream from beyond its core customers, largely telecom operators, towards big companies outside that sector, airline, oil companies, car makers, public emergency services, etc. All of whom are looking for whole solutions in the hardware, software for their operations. This looks like an interesting cultural integration challenge, if nothing else. We'll have to see how it shapes up.
Yes, indeed. What is the other listing?
Yeah, the second listing is a French company, Direct Energy, which is moving from the Autonext, which is the very, very small cap, to the Euronext small cap index. The group Direct Energy is France's third player in electricity and gas supply market, and is a direct result of competition being opened up in those markets in 2002 and what is known as the law NOM, Nouvelle Organisation de Marché de l'Électricité, in 2011. Enlarged by the additional purchase of KBIO in 2012, the group has managed to secure loyalty of about 1.4 million residential and business customers. It's also developed an offer for companies and local authorities with more than 100,000 delivery locations. The group is also developing a presence in Belgium. Direct Energy claims its success has been underpinned for more than the past decade by its technical expertise, its excellent customer relationships, and its capacity for innovation. It is growing by taking market share from the established ex-government controlled Gaz de France, Electricité France. In 2014, the group realized sales of about 810 million euros, delivering about 8.4 trillion watt-hours of energy. An unusual use of example of customer service in France. We'll see how they get on. That's it for today from Graham Brown for Small Cap Nation Europe.
And it's a coming out party for Tinder. The parent company of the dating hookup app goes public. Was it a successful match for investors? The story next on Small Cap Nation.
Everyone works hard for a reason. Working together, we can help you prepare financially for when 2 becomes 3. Wells Fargo. Together we'll go far.
You want to be the best investor you can be. You want to cut through the noise of an overwhelming amount of analysis. You want the insights that will help you decide which ideas to execute and which to leave behind. You want your trades executed in 1 second or less, guaranteed and routed with institutional quality technology. Look no further. Open an account and find more of the expertise you need to be a better investor.
When I got the phone call that we had received the grant, I held my breath.
To have a program like this is a big reward.
Being a Chase Mission Main Street grant recipient is a game changer.
One of the biggest surprises in starting a small business is the number of hours we should work for the first 20 years.
One of the great things about this grant is that it is going to let us invest in some additional inventories.
It's going to allow this business to go to the next level.
Being a recipient of this grant, we can't be thankful enough.
It's a dream come true, and I'm still in awe.
Well, Match Group began trading on the NASDAQ as a public company. How did the IPO fare?
Shares of Match Group began trading at $12.98 Thursday morning in its NASDAQ debut. That is about 8% above its $12 issue price. Now, shares are climbing steadily, gaining as much as 15% in its first hour of trade. Match is profitable, unlike the other tech IPO today, Square. Now, Match Group reported 2014 net earnings of $148 million on revenue of $888 million. The company operates Match.com, OkCupid, and Tinder. It priced its shares at $12, the bottom of its indicated range of between $12 and $14. Match raised nearly $400 million. For investors out there, it's important to keep in mind that Match has more than twice the market share of its biggest competitor, and it does come down to users. When a paying customer of a dating site finds a date or match, that person may cease their subscription, at least for a while. Now, user growth is with Tinder, the free mobile dating app known for having members swipe left or right depending on their interests. Tinder opened up to advertisers this year and recently introduced a paid service which starts at $10 a month for unlimited swipes and advanced features. Because of its high engagement levels, it could capitalize by ramping up its advertising platform. It is no secret that free profiles are popular with users, especially with Tinder's demographic. But Match Group's cash cow is its traditional subscription business, with plans kicking off at $20 a month.
What about IAC Interactive Corp? Here's a multi-billion-dollar media and internet company that is never behind in the buyout game.
The Evening Standard published an article that included some false Tinder metrics and some very questionable quotes attributed to Tinder's top executive, Sean Rad. The interview raised questions about whether the company violated its quiet period, and that's the window between filing a public document and the time the SEC deems it effective. Yesterday, Match issued a new public filing saying the article and Rad's comments were not endorsed or condoned by the company. Separately, according to Renaissance Capital, in 2015, the average IPO has lost 4.8% from its offer price. Now, in terms of major IPOs over the past 12 months, half are now in the red, including Box and Lending Club. Ferrari rallied in its October debut, but its stock has fallen 9% from its IPO. And Etsy shares have fallen 46% since it was valued at $4 billion in its market debut. And separately, Fitbit is up 43% from its June IPO, but it slashed the size of a secondary offer last week and offered shares at a discount. Now, there are some exceptions in this space. Long-term investors who have done their research may not need to worry, but trends are vital in any sector and caution is still advised.
How are recent IPOs faring?
Jane, you're absolutely right. IAC has previously spun off a number of brand name companies, including Expedia, TripAdvisor, and HSN. And it just offered to scoop up Angie's List earlier this week. Angie's own turnaround efforts are just getting kicked off, so shareholders would lose out if they accepted IAC's buyout offer of $8.75 per share. According to an IPO prospectus for Match Group, Match spent over $1 billion to buy out 25 brands for its dating portfolio, and IAC still owns 86% of Match's stock after the separation, so proceeds of the offering will be used to pay back debt.
Sports apparel company Finish Line is a winner, according to one analyst. Our buy, sell, or hold segment is next when Small Cap Nation comes right back.
Guys, I got the jerseys. El Nino. Aquí. Spray Dan.
Oh, yeah.
Don Ovan.
Think that's me?
You guy. It's $40. Can you cover that?
I'll send it to you right now. Done.
Okay, got it. So Hat-Trick Rick, he's the best player on our team. You get the ball, you give it to him.
Great. Rick.
On your phone, online, on the go, Wells Fargo makes it easy to get banking done.
All right, Don, you're on. Nope, just kidding.
Doug, you've been staring at that for a while, huh? Listen, TD Ameritrade has former floor traders to help walk you through that complex trade, so you'll be confident enough to do what you want. I'll pull up your number. Blammo. Let's get those guys on the horn. Ooh. Looks like it is time to upgrade your phone, Douglas.
For all the confidence you need, TD Ameritrade. You got this.
Let's go, Serena. Fight, fight. Come on, fight. Stay low. Come on, Serena.
Back to the top. Here we go. 2, 4, 5, 6. Whoa, stop. Let's go back. 1, 2. Whoa, we're going to stop there. I bet we can do it even better.
It took tennis legend Serena Williams, fencing champion Tim Morehouse, and the world-famous Rockettes years to master their craft. But it took them only moments to master paying bills at Chase.com, depositing checks at Chase ATMs, and transferring funds on the mobile app. Technology designed for you, so you can easily master the way you bank.
In buy-sell hold action today, Asterio Biotherapeutics was rated new outperform at FBR. Savita Solutions cut to outperform at Raymond James. Fiesta Restaurant Group raised to a strong buy at Raymond James. Finish Line was rated a new market perform at Wells Fargo. Genesee & Wyoming was cut to hold at Morningstar. Green Plains rated new buy at BB&T Capital. Regis was cut to neutral at Piper Jaffray. Star Bulk Carriers downgraded at Deutsche Bank. And Titan International was cut to a sell at Goldman Sachs. Thanks for joining us on Small Cap Nation, and we'll see you back here tomorrow. Until then, check back for the latest news and research on smallcapnation.com, Facebook, and Twitter.